You know the feeling, we've all been there. You glance at your phone, you see the markets are flashing red, and that knot just starts to tighten in your stomach. It's a really powerful feeling, right? And honestly, it drives us to make some pretty terrible decisions. So today, we're going to build a system to tame that feeling. We're going to talk about how to become a more disciplined and ultimately a more successful investor.
So, let's be real for a second. When you see a big market downturn, what is your first gut reaction? Is it to just panic? Do you feel that urge to hit the sell button? Or maybe you start wondering if you should just pull everything out and, hide it under the mattress. That immediate emotional response, that is exactly what we're here to talk about.
But what if you could swap that panic for a plan? I mean, instead of just reacting to all the chaos, what if you had a clear, predefined strategy that you could actually trust? Now, that's not some kind of superpower. It's called emotional discipline, and we're going to figure out exactly how to build it.
So, first things first. We have to understand who our biggest enemy is when it comes to investing. And here's a little hint. It's not the market. It's not volatility. It's us. It's our own emotional reactions.
This right here is a huge shift in perspective. Look, markets are always going to be volatile. That's just what they do. We can't control the storm, and trying to is just going to lead to a lot of frustration. The real battleground, the one thing we actually can control, is how we react. So the problem isn't that the boat is rocking, it's our impulse to jump overboard.
And you can really see the two paths an investor can take here. Over on the left, you've got the emotional investor. They're glued to their phone, right? Reacting to every single headline with fear. But then on the right, that's the disciplined investor. They have a plan. They're calm. They know that this is a marathon, not a sprint. This person on the right, that's who we want to be.
So how do we get there? How do we become that disciplined investor? Well, it's not magic. It's all about structure. It's about building a fortress of practical, solid habits to protect ourselves from our own worst impulses. And this fortress, it's not made of bricks and stone. Nope, it's built from a set of simple but really powerful habits. It's a system that's designed to protect your long-term goals from your very own short-term emotions. You ready to lay the foundation?
Okay, here are the first 3 pillars of our fortress. First, we have to reduce the noise. Seriously, checking your portfolio every day is like weighing yourself every hour. It's just going to drive you crazy. Zoom out. Second, automate your actions. Set up those regular automatic investments. This forces you to buy consistently, and it takes the emotion right out of the equation. And third, the foundation of it all, your emergency fund. This part is absolutely critical.
So why is it so critical? Well, it all comes down to this number, 6 months. This is your financial fire extinguisher. Having 6 months of living expenses saved up in cash means that if you lose your job or face some other emergency during a market downturn, you won't be forced to sell your investments at the absolute worst possible time. This fund buys you something priceless, peace of mind.
All right, we've built the practical defenses, we've automated our actions, we've secured our foundation. Now it's time for part 2, fortifying our mindset. This is all about changing the way we think about investing.
And maybe the most powerful tool for this is something called an investment thesis. Put simply, it's a document you write for yourself when you are calm and rational, explaining exactly why you are buying a specific investment. Think of it like this. You're making a rational decision now to guide your emotional self later when all the pressure is on. It's basically a contract with your future self. And this is the rule. You write it down. Why do I own this? What do I expect from it? And, this is key, under what specific conditions would I sell? And notice the review schedule here, yearly, not daily. This forces you to focus on the big picture, the fundamental reasons for owning something, not its day-to-day price swings.
Let me put it another way. When the market feels like a raging storm and the waves of panic are crashing over you, this is your anchor. You don't have to try and make a decision in the heat of the moment. You just have to look back at the calm, rational plan you already made for yourself. And the final piece of our mindset shift is perspective. And for that, we just need to look at history. Every single major market crash in history, every single one, has been followed by an eventual recovery and new highs. I know, it might not feel like it in the moment, but zooming out and studying the past is an incredibly powerful antidote to fear in the present. History shows that staying the course has always been the winning strategy.
Okay, so let's put it all together. We've covered habits, we've covered mindsets. Now here is the simple checklist you can use to put it all into practice and really take control.
So, this is the system.
This is your fortress. You reduce the noise by checking less often. You automate your buying. You secure your finances with that emergency fund. Then you anchor yourself with a written thesis for each investment, and you gain power from knowing your history. This isn't just a random list. It's a complete system for achieving financial peace of mind.
So I'll just leave you with this one question. You probably spend a lot of time crafting a plan for your money, right? Thinking about its future and its long-term goals. So isn't it time you created a plan for the one thing that threatens to derail it all? Your emotions?